Okay, hi there and welcome to another video looking at microeconomics and in particular some of the policies, strategies that might be used to address and counter monopsony power in product markets. There are two types of monopsony power. One is in product markets for goods and services and the other is in the labour market, and we've covered that in separate videos. This session will look at, for a few minutes, at monopsony power in product markets. And a monopsony is a business that has substantial buying power, bargaining power and buying goods and services in their particular market. And typically they can use that bargaining power, perhaps with a supplier, to negotiate a better price for their inputs, their components, their raw materials. So a good example would be the big retailers, the grocers in the UK, with multi-billion pound turnover. They have significant power when they're buying sources of milk from milk farmers, from wine growers, from other food suppliers. They have monopsony power. And if you like, the abuse of monopsony power, the exploitation of that market power, can be a particularly difficult problem for smaller firms further down the supply chain. So, for example, supermarkets might make late payments or send late cancellations to orders to farmers. Somebody's once said that's the equivalent of ordering a meal only to walk out as soon as the meal arrives at the table. Oftentimes smaller farmers complain that they're left with unsold stock which might have to be thrown away. So monopsony power is a major issue. All firms that grow can have monopsony power. Effectively it's a type of economy of scale. Here's a really good example, topical at the moment, the rise of Amazon. Not only has Amazon cemented its position as perhaps the biggest online retailer in many parts of the world, it's also built substantial cloud computing business, Amazon Web Service. It's a major player in music and video streaming, and of course a few years ago it bought Alexa, the smart speaker. The chart here shows that Amazon's net income, their profit, more than tripled from just over $3 billion in 2017 to over $10 billion in 2018 on the back of revenues of $232 billion. Amazon's strategy has very much been growth maximization. Grow the business as quickly as possible, grow the top line revenue, and eventually the profit will appear as it seems to be doing in 2018. Now, Amazon has substantial monopsony power, particularly when it's buying product and stock of suppliers. So what can be done to help counter monopsony power in the market? There are lots of different ways, and again, in an exam, you just need to pick out maybe a couple to focus your answer and build an analysis and an evaluation. So we'll go through quite a few here. One is regulation. I'll give you an example of that in a second. You can also use competition policy. You might want to encourage producers to come together to form cooperatives as a counterbalance to monopsony. You might want to bring in laws on the sourcing of products, and you might want to encourage suppliers to use technology to sell direct to consumers rather than having to go through the middleman, the retailer, if you like. A couple of examples just to give you a feeling of what might be done. So the first option is to use regulation. And indeed in the UK, the government has set up a specific regulator to monitor the activities of businesses with monopsony power. They have created something called the Groceries Code Adjudicator, the GCA, and that makes judgments on issues relating to a code of practice between the big retailers like Sainsbury's and Asda and things like milk farmers and arable farmers. This came into force in 2013 on the back of a major debate and controversy about the price of milk. Many milk farmers were saying that the price they were getting from supermarkets was well below the average cost of supply. Now the GCA monitors the trading practices of any grocery retailer that has an annual turnover of more than £1 billion. Obviously Tesco and Sainsbury's and Waitrose come into that category. Its main aim is to promote what we call fair dealing in the supermarket sector, and in theory they can levy a penalty for malpractice of up to 1% of turnover. Whether that's sufficient to really change behaviour, of course, is open to evaluation. Second way that you can control the monopsony power of a business is to use another form of competition policy. So, for example, the authorities might try to bring down the legal barriers to entry in a market so that new entrants emerge, come into the industry, and that helps to dilute the market power and the buying power of these existing firms. You might even consider what's called forced demerger or forced divestment, where you tell a firm that it must break up, if you like, into smaller units to bring down its market power. That happened with the oil companies in the United States several decades ago. Some people are even thinking about perhaps breaking up Amazon or breaking up some of those other major players. You can block a merger and a takeover, both horizontal and vertical, if you think it will lead to a substantial lessening of competition. However, there is no guarantee that breaking up a firm with a big market power, including monopsony power, would ultimately benefit the people you're hoping it will impact, namely the consumers and the suppliers. The third option is to try and encourage a countervailing or a counterbalancing power on the supply side. So one of the ideas here is that you might want to encourage producer cooperatives to develop. The image I'm using here is taken from the Oromia Coffee Union based in Ethiopia. This is a farmers' co-op, which is a business with limited liability, where a lot of smallholder coffee growers come together and they have formed a cooperative. In fact, it's been around now for 20 years. There are over 22,000 farmers involved, 400,000 members. They've got £20 million of capital. And the idea here is that if you bring together individual farmers who on their own have no market power, they are effectively price takers in the market, then at least they might have some semblance of selling power when it comes to trading coffee with the big transnational corporations such as Zara Lee or Nestle. And if they can then get a better price for their coffee, for their Arabica or Robusta coffee beans, they might be able to not only pay high wages, but perhaps use some of the extra profit to invest in processing and branding of their own coffees. Fair trade, of course, has been around for many years. Fair trade is an attempt to guarantee a certain minimum price for farmers. The impact has been debated and disputed over the years in terms of whether it fundamentally changes the balance of power in the market between the monopsonists, big coffee roasting companies, for example, and the smallholder farmers. But crucially, I think in the long run, that would be the point I would make in sort of evaluation. The crucial point for whatever small farmers, smallholders of different types, is to build partnerships and increase capabilities. So in the long term, my argument would be suppliers need to develop resilience so they can effectively or better compete against the buying power of a monopsonist. And again, just consider a coffee grower from Ethiopia shown in this example, a partnership between the Aroma coffee growers and Union Direct Trade, shown here in the images. That's really important to the farmers. So Union Direct Trade is set up by some entrepreneurs, initially in San Francisco, now based in London. And typically, the coffee growers, in their relationship with Union Direct Trade, they get a price often 50% above the fair trade minimum. And farmers then sell direct to the roaster in the UK and the retailer, so that the transnational corporations don't get to take the immediate profit. It's really quite important to think about this in terms of the long term. Can you get the growers themselves to develop their own brands, for example, which they can then sell direct to customers? And that could just help to tilt the balance a little bit in their favour. Monopsony power is a growing topic, both in product markets and also in labour markets. It links to lots of micro and macro topics, including globalisation, the terms of trade, economic growth, poverty reduction, and much else besides. Okay, thank you for joining in this video.